Cash is a highly liquid and highly desired asset. Hence, it is important to implement cash controls to report the movement of cash and act as safety measures to prevent the theft and misuse of cash. One of these cash controls is bank reconciliation. Bank reconciliation is the process of recognizing the differences between the cash balance on the bank statement and the company records and to ultimately determine the actual cash balance. The first step in the process of bank reconciliation is to adjust the reported cash balance on the bank statement to meet the company's actual cash balance. This is done by first adding deposits in transit, which are deposits made by the company that have not yet been cleared by the bank, and hence are not yet displayed in the bank statement. Secondly, we deduct outstanding checks, which are checks distributed by the company but similarly are not yet cleared by the bank. By adding deposits in transit, then deducting outstanding checks, we're provided with an adjusted bank balance, which should equal the actual cash balance. The next step in the process of bank reconciliation is to adjust the cash balance reported on the company's books so that it too aligns with the actual cash balance. This process involves adding and subtracting funds that have been recorded by the bank but not yet recorded by the company. For example, service charges as well as the company's checks returned for insufficient funds, known as an NSF check, must be subtracted from the company's cash balance. Similarly, funds from the collection of a company receivable or interest on a note must be added to the company cash balance. Furthermore, errors made in the company's books, such as an overstated check, must be fixed by either adding or subtracting the error. By making these adjustments, the company's cash balance will now equal the actual cash balance. Now that the bank balance and the company's cash balance have been reconciled, the company's books must be adjusted by recording journal entries for the adjustments made to the company cash balance. For example, the adjusting journal entry for the collection of a receivable would be as follows: debit cash, credit account receivable. Similarly, the journal entry for a monthly bank service charge would be as follows: debit service charge expense, credit cash. Once these journal entries have been finalised, the process of bank reconciliation is complete and the company's cash balance is now correct.